Welcome back to Explain the Charts. Today, June 6th, 2025, we're dissecting the SPY, also known as the S&P 500, and the latest market news. We'll cover the top stories, like the recent jobs report and Tesla's challenges related to the Trump-Musk situation, and then we'll analyze the SPY chart data to see how these events might be influencing the market. The market seems to be responding positively to recent jobs data, but Tesla's woes are creating some headwinds, so let's take a look at the SPY chart data and see what's going on. First, let's bring up the daily chart to see the overall trend. Looking at the daily chart, we can see a generally upward trend over the last several months. However, there's been a slight downtrend recently with some large red candles. These red candles from late May into early June are a potential warning sign. We need to keep a close eye on this. A potential level of support lies around 580, which has acted as both support and resistance multiple times in the past. Now, let's switch to the 1-hour chart for a closer look at the more recent price action. On the hourly chart, we see a more detailed picture of the volatility. Notice the choppiness with the up and down swings. Let's zoom in on the last week or so. Looking at the 1-hour chart, we see some support around 590, which we have bounced off of a few times in the last week, but it looks like we're testing it again today. If we break that 590 support, then 580 is definitely the next level we would want to watch. To really zoom in, let's take a look at the 15-minute chart to see what the momentum may be. On the 15-minute chart, we see the price mostly in a tight range the last couple of days. There's been a sharp drop today, breaking below the 593 level from a few days ago. It looks like that Trump-Musk situation and jobs report data may be weighing on the market for now. This recent short-term momentum seems bearish. 590 on the 1-hour chart is looking like a likely target to test here soon. So, what key levels should we watch? In the short term, a break below 590 on the hourly chart could signal a further decline, potentially testing that longer-term 580 support. If we break through 590, I'd say the chances of testing 580 are very high, maybe 70%. If positive news emerges that thaws relations between Musk and Trump, reinforcing a continued jobs recovery, we would likely test the 600 level again, with a possible breakthrough. A break below 580 could signal a deeper correction, opening the door to levels in the mid-500s from earlier this year. Keep an eye on economic data releases, particularly anything related to employment and inflation, as those will be the main drivers of market sentiment in the coming weeks. This is Explain the Charts. Thanks for watching and good luck with your trades.